Hey, everyone, it's Rob. Sorry about the delay. Let me go ahead. I'm on a different platform here. There we go. There's the chat. Let me know that you guys can hear me. This has been a bit of a challenge here this morning, just getting logged in. All right. I do appreciate that. Fantastic. Let me just grab my PowerPoint, which has all of the pertinent information in it for me today. All right. I think we've got it now. Let me go and share the screen. All right, let's go put on the camera. All right, so I'm not sure why it's not letting me put on the camera. Andrew, it's saying something on your end, support member Andrew. Do you have to approve me for that or what? I am not sure. All right, guys, we're just gonna, all right. Let's try it again. Aha. Success, I think. Perfect. All right. So I'm on the web-based platform instead of the actual platform. So bear with me as I try to figure this junk out. As we get started here, let me get my drawing tools set up. All right, perfect. Keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance before you take on a trade or a setup. All right, so we got a lot happening here this week. We got Inner Circle check-in tonight. The monthly is coming up tomorrow evening. Brandon's teaching that. Tomorrow we also have the E-mini. Tonight we have the E-mini Q&A. Tomorrow night we've got Mastermind Group, Monster Market Movers on the 28th. Got a lot of good candidates. I picked a bunch out already for that. I actually have all of our candidates picked. And I found a couple of ones that I'm adding to my list right now, ones I want to look at. Power Hour, Cover Call Explorer, E-mini are on their regular schedule. Power Hour this week, we're here. Next week, Monday is holiday, so we'll be doing it on Tuesday. So look for that. Trading Coaches Playbook is on regular schedule. And the last Art of Cash Flow coming up on August 30th, which is another day or so. Here's our followers page. Make sure you follow along with the various social platforms we've got out there. Trading Boss Manifesto. You can download this on the website. You can download it on tradinglikeaboss.com, and you can download it on robertjroy.com as well. The Art of Cash Flow. So Trip, this is the last one that he's teaching on the 30th. So go ahead and grab that before it's too late. Up. I don't want to show that yet. What trades y'all got done? Drop them in. Let's see. Already got some answers came in on it before I even asked it. Brenda said no trades today, Friday. Whoops. Let me just get rid of this. Keep the questions open. Today or Friday, we're on Thursday, 7.49% on SPY. Great. All right, Erica, we'll get you taken care of. Andrew, if you could help out Erica there, that would be great. John said Wheel of Fortune, Beyond, Naked Puts, NVIDIA, and Sava. Cash flow of 1,400. Great job, John. I told Sean this week we need to get my little button with the swinging the hammer and the screaming and the congrats and all that over here, since we're not doing these in the office any longer. Yeah. Jennifer said SMCI put $880 offset by 2 trades that didn't go my way and net 4,300. Okay. Okay, net 300. Sorry, she had the wrong number in there. Great job, John. I got some comments coming in there for you. All right, so here's Tony. And he's got 2 different setups in here, Visa and UPS. So let's see how he made out. So this was, we'll start with Visa because it just happens to be the ones on the bottom. It was a buy to open, 10 contracts on Visa. And he bought them at, and these were puts, and he bought them at 6.25. He wound up selling them at 6.50, right? Same day. So 25 cents on there, nothing crazy. 10 contracts, $250. Again, nothing crazy, but I'm sure many of you wouldn't say, no, I don't want it. All right. And then UPS, he did this trade on August 22nd, right? And he's got an entry here. He bought them at 4.15, sold them at 4.60. It looks like he's still got a couple of contracts open on that because there's only 5 closed. So he still has a few open on that right now, but overall up 45 cents times 5 contracts, 452.25. Overall, not too shabby. Not too shabby whatsoever. Yep, Tony did a good job. Absolutely. Let's see. All right. So today, all right, Zoom sending me messages here. I don't know why. So today, I want to look first at the pivots on the Qs. And I want you to see back where we closed up on Friday of last week. So we closed up right here on this red candle, right? We opened up just about where we closed, right about exact there. We broke down, we retested, we failed. So we broke down through the 79.35 level. We had that 77.92 level was our first target. So that was target number 1, half the trade there. And then target number 2 is 76.50 is target number 2. So 76.5 to 79, it's just under $3 move on half the contracts. The other half are about $1.25, $1.50, somewhere around there on the first half of the contract. So overall, good setup. I didn't go back and look. I did not like the gap up on the SPY. There was nothing in here. We were just getting lower candles, lower tops on these the first 3 red candles here on the day. You got the green candle, candle 1, and the next 3, 4 were red candles. Nothing give me a higher high, so I wasn't interested in it at that point. So I passed on SPY. I did not take the down trade. It just seemed like it had more strength than the Qs did. The Qs just opened flat and failed right from there, so it was an easy setup. That was a decent trade. And then Costco, let me bring us over here. So I've been playing around with the real-time data on Omega charts now for a couple of months, and it's made my life a lot easier when I have to explain things or even intraday trading. These templates are great, and yes, you can set stuff like this up on Omega charts. It can be done. I'm really used to TradeStation, so it's easy. So right now, what you might notice is this chart, and it's a daily chart. You can see the time frame right here. In the upper right-hand corner, there's an S, and it says symbol link, and it's pink, right? And I chose pink for the color. Pick any color you want. I don't really care. It's up to you, okay? So and down here, you'll see there's a 5-minute that's Costco and a 1-minute that's Costco. If I go over here to go to CrowdStrike, change this to CrowdStrike, notice the pink is still there. It now says CrowdStrike. That's just because it's the active symbol. Well, the 1 and the 5 down here have changed to CrowdStrike. So they automatically change when I go look at it. If I don't have that activated, when I'm on a daily chart and I go to the 5-minute, I then have to go ahead and click on the symbol that I want to flip it over to. This just made it easier. So it's a quick little tip if you're using Omega charts on the intraday data, will help make things a little bit easier for you. So on Costco today, right there. So I did not do a directional trade. All right, I did a bull put spread on Costco, and I did down below the 876.65 level. And you guys are going to see a quick little training that I'm going to do coming out on this, hopefully right at the very end of the year, beginning of the upcoming year, is I want you to stop paying cash for your cars, right? I don't want you to pay cash ever again for a car. I don't want you to pay cash ever again for a large expense. What I want you to do instead is I want you to use the market to offset the cost there, so you get to keep the golden goose at the end instead of killing it. What do I mean by killing it? You got 25 grand in the bank, you're buying a car for 25 grand, you hand them the 25 grand, you have no goose left. You paid for your car, but now you got to start building it back up again. I'd rather keep the goose, keep the 25 grand, use the market to pay it off. So if you had $25,000, right, just to kind of take us on a little bit of a rabbit trail here for a second. Where's it going to open? If you had $25,000 that you're going to put into a vehicle, into a car. All right. So listen, unless you're in a place in life that you can really afford an $80,000 car, a $25,000 car is fine. There's nothing wrong with a $25,000 car. Don't let anybody shame you into you need a better or nice looking car. But if you took $25,000 and let's say you needed to make the car payment now, because you're not putting that money down. You're taking the loan through the car, right? Through the dealership. Car payment now, let's say we'll make it an easy number, it's $500, right? So what's $500? If I can just make $500 on $25,000, how much is my rate of return have to be for me to cover my nut each and every month? So cash in my pocket would have to be $500. Cash out of my pocket would be $25,000. It's really not the right answer. What am I doing there? So what does my rate of return have to be able to cover $500? So here, let's do it this way. If I took $25,000 and made 0.01% on it, it gives me $250. Yeah, so I was right. My math was right. You need to make 2% on this account for the month to make up $500. You know, the very first trade that was put in today, where it goes. Sorry, guys. I'm just trying to catch up with numbers here. Was Brenda, 7.49%. One day, one trade on SPY, right? So is that a feasible way of doing things? The answer is yes, right? Now, there's some mechanics behind it and the types of trades to consider and so forth. Could I have done this with a directional trade? Yes. I have chosen with my truck to not do that. I prefer to do it with credit spreads. And if I could just cover enough to make my monthly nut, right? Now, I did take a loan. I did put a little bit of cash down on it. I did take a loan. And the reason I put the cash down is I put down as much as they let me on American Express. So I got points on the whole thing and every bit of it, right? Points, status, the works, right? Miles, 1.5 miles because I spent it at a car dealer at the time. And then now it's car payment, right? So, and I took at the time when I took this, which is back in, it's a 2020, my vehicle. I bought it back in late 2019. I bought a brand new 2020 and had to be made at the factory. I got it right as COVID hit. I mean, literally, I got it in and right as COVID went crazy and no one could work any longer, right? So I was very fortunate that I got the car when I did. And there's zero interest on it pre-COVID, right? So there was a zero interest rate for 5 years. I've got it's like 5 or 6 payments left on it or something like that. And that's it. But the goal was to not give up the goose, right? I didn't want to have to cut off the goose's head and say, here you go, here's my goose, cook it, right? I kept the cash to not have to put it all down. Yeah, could we put it down? Without a doubt. Did my wife want to put it down? Without a doubt. She wanted to put all of it down and then some. Pay for everything with it. Nope, I put in the extended warranty. I put in taxes, license, registration, everything was put into that. It was all in there. Right. So for me today, credit spread on Costco down below that 876.75, we'll put spread generated. It was 875, 872 half is what it was. Brought in 56 cents on that trade setup. So here's the deal. 10 contracts, 56 cents. If the trade expires worthless, that's $560 towards my $600 car payment that I have to make every month. Okay. And of course, everything we talk about is education, right? We're not talking about funded trades at this point. We're just using an example, okay? But this was the example from today. This was the trade setup from today. And look at how strong my support line is with the 8 moving average there. So to me, it was a home run to be able to do that type of trade today on a day that I didn't like anything. I was watching Amazon today as a potential day trade, and it kind of flibber-flobbered back and forth on the fib line. Eli Lilly Yeah, I mean, that one was okay. I didn't get close enough to the 942.19. Intraday on the close, it got to about 943.19, about $1 above. I wanted it just a little closer. So, and that was on a 1 minute candle. MasterCard, we got a little bit of a bounce now, so it's better than it was, but it was very ugly before. I didn't catch it when it first made its move, and but those were the three I was watching for today. Costco was just, I knew where it was. Once it got its gap up, I knew I had the confluence of the eight moving average and the fib line. It just became a no-brainer for me at that point. Yeah, let's see how good. Erica said, good strategy. Just literally paid $20K to pay off my vehicle. I don't like debt. Yeah, so when we're going to take it a step further inside of that group. Now, I am not a licensed agent. I'm not a financial advisor, insurance agent, and so forth. But there are perks to being in masterminds, some of the ones that I am in. We had a speaker come in at our last mastermind when I was on vacation down in Cancun. He was part business, part personal. We had a speaker coming down there that is an expert on a very specific certain type of insurance that I may or may not use it at this stage in my life, my age, may or may not. But everybody that was in that room was a business owner, right? And there are people that I'm sitting in that room with that are, their businesses are $100+ million a year. Some of the individuals in that room. And they're jumping all over this type of strategy because it's going to be a double dip. You're going to be able to have this, this type of insurance policy, and you're going to get interest on the money that you're going to pay back to yourself that you're going to generate from the market. So when I build this whole strategy out for it, it'll be a short presentation. I'll probably do it in 45 minutes to an hour. Exactly. Be your own bank like the Rockefellers. It's a certain type of that, Erica, yes, but it's not just that a standard policy that works for this. It doesn't work that way. Let's see. Trader Will said, I would not go through the dealer for the load. They are way overpriced. Better to go to the back. The 25K was in. Yeah. So for me, 0% interest rate was well worth it. I took it, right? Bank wouldn't have made any benefit for me. Today it might be better, but I do know my next door neighbor is a former Ford executive. He was there for 40 years, almost 40 years. We've actually, both of my daughter's first cars we bought from him. He uses the car 2 or 3 years and he buys a new car, right? There were only disadvantages. We had to work the smell of smoke, cigarette smoke out of the car, which we were able to do. We brought it somewhere and they were able to take care of it for us. So other than that, the cars are in great shape. They're 2 years old with 10, 12,000 miles on them. He doesn't drive anywhere, right? So, and he's still involved. He still does marketing for them, some advertising stuff in a group setting where a bunch of dealerships advertise together. Anyway, we talked not long ago about cars because he just bought a new car. He was asking if I wanted to buy the next one that they just were selling, which we did. My girls both have brand new cars. We got them now, so they're good to go. So we were talking about what's going on with the dealers now and so forth. He said, oh, yeah, they're desperate. They've got cars on the lots, many, many more days now than they were where they were selling them, before they ever hit the lot. And now they're sitting there for weeks, some models, months, and not selling. So there's a lot more incentives of lower interest rates and so forth, right? So, but whatever it is, we'll get to some training on stuff like that. But this was the setup for me today. It was okay. It worked, right? Now I'm in the trade. We'll see how it goes. I'm in the, I've got it until Friday, my obligation. Do they always work out 100%? No, I wish they did. If they did, I'd be charging millions of dollars for that training if it all worked out 100% of the time. Without a doubt. So, okay, good. Just making sure I'm all caught up on questions here. All right, so let's look at the S&P 500. So, fun fact is, for me, very excited that we got above the previous swing high we had. The next swing high is the highest high the S&P has ever made, which was back a couple of weeks ago, July 16th, right? So a month and a half. Just about a month and a half, we'll call it, right? So overall, I'm going to move this back because I don't really want it that far out. I want to see it, but I don't want to see it there. So right now, we're looking at 56.02, 56.03 is support, then 55.75, which is the 8 moving average. Those are our downward supports, right? On the upside, we've got 56.67.20. That's critical to be the exact number, 56.67 67.20. Why? Because it's the all-time high, right? Or if it was just a recent swing high in there, all right, it's important. What I did is I snapped on here. Let me get a drawing tool. From this, I went A to B to C, which was that deep pull down we had in there, looking to project upward numbers. And you can see there's two lines there, the 236 and the 618. So we've got some, and this is not my favorite way of doing it, but it is how it's done right now. We've got of course, we blew through the 5503 already. We've got the 5667 and then 5686 right above that, which is the 618. Our 100% extension off of this setup takes us up to 5868, which takes us up to a confluence with this 5884. I mean, we're right in there, 5852. There's a lot of lines around there. I'm not looking at those levels at this point, at least not up that 100 percentile high, but I am looking at that 5667, 5686. So about a 10 or 20 point move in there, 68 to 88, right? We'll call it 20 points, give or take, right? So we've got some room in there, but we're running out of steam. And I'm not surprised for a couple of reasons. Number one, Powell was going to speak, which did last week. We got minutes coming out I think it's this week on the Fed. September, we have a Fed announcement coming out of rate hikes. The speech on Friday from Powell did indicate that he's tired of waiting. Jobs market's going to do what the jobs market does. We need to start making some adjustments. So I think there's good and bad, but he did warn that he didn't think the jobs market was going to be good. Now, I know government officials, and I don't care if you like the presidential team or not, but government officials, I love them. Well, we made a mistake. It's only a comma difference, right? Where we are over, we were off a little bit on jobs numbers. You're off by over 1 million. Jobs numbers are way out in left field, which in reality, government officials, period, when it comes to this stuff, I'm not a fan of. I think there's manipulation. Why is it every single week you are the government? You know everybody's business. How do you not know what the unemployment numbers are? How is it possible you don't know that? You can't get a supercomputer that goes, press a button and it just spits it out? Come on. Somebody's playing games here all the time with this stuff. A couple of years back, Ryan Litchfield caught a disparity in something when it came to job numbers. He went literally up the line, E1, E2, E5, E8, E10, going up the governmental line, talking to supervisors about the numbers. And the highest one he got to, it was over 10, I believe. But the highest person he got to said, yeah, well, our sampling, you ready for the word? Sampling is not much different than ADP's. Wait. ADP, private industry, they're going off their own payroll. You are the government, you have everybody's payroll. And you're using a sampling, you're not using everybody. So there's manipulation in those numbers, and I do believe all politicians, do it to their benefit, right? Where they fudge here, fudge there, and so forth. Right now, what was the number I heard earlier today? Well, it was an opinion, actually. I didn't check Fed number. Tripp, can you grab that for me, please? The Fed number. But one guy I was listening to on CNBC before, 50% in September, 50 basis point drop in September, 50 basis points in November, and 25 basis points in December. Right now, right or wrong, good or bad, it is what it is. That's what their firm believes we're going to see happen. I don't know. I don't care. What happens. I'm going to trade the event. I'm not going to worry about the potential outcome. I can't. Well, what about taking a loan or this? Okay, if you're stuck in that scenario where you're trying to figure out, is this the right time to buy a house, sell a house, take a loan, don't take a loan, car, whatever it is, personal, you've got to make that based on your situation, right? And yes, then interest rates might play into it. But if you need the loan, more than likely, it's not something that you're going to wait 2, 3, 4 months for rates to change. And remember, you can always make an adjustment and refinance. Right? Yes, there's a cost involved there, but what's the opportunity cost by waiting as well? Okay, let's see. So they all lie. The credit spread PK was 872.5, 875. No, I did not do a directional on it. Erica, I did a bull put spread. Yeah, all politicians lie. Exactly. September, 69% chance of 1/4, 30.5% chance for 1/2 basis point increase. All politicians are liars. The old joke of what do you call 1,000 attorneys at the bottom of the sea a good start? That's the same for politicians, right? Although one at the bottom of the sea is a really good start. Really good start. Okay, for politicians. I think they're much worse than attorneys are. All right. So overall, I'm overall bullish on the market. We're in a bullish bias with a rank of 3 on today's price where we are currently right now. A pullback to the 56.02 puts us at a rank of 2, or a close near the 56.67 does. The only way to be bullish for me is to get above that 56.69, 67 level, right? So 56.70, let's call it, right? But really, I want to see us get above 56.86, retest and bounce. That would give me belief of we're moving in the right direction forward, right? We've got a good balance. We're moving forward. Life is going well, right? We could just get above that. The recent high is okay, but we've got this 618 just dangling above our head then. There. Yeah, I've got attorneys in family as well. Erica, I wanted to be an attorney. Actually, I think I'd be a really good litigator. Oh, yeah, I'd be able to drive the other side nuts. Ask my wife. I do it to her all the time. We're in an argument, I can spin circles around her, which is why she doesn't like to do it. She'd rather pent it up and walk away. When she does blow up, it's bad. But she'd rather not, because she knows that I'm really good at talking. I can spin it a million different ways without even thinking twice about it. Where she's got to, I should have said that. You know, I'm just good at it. But I'm glad I didn't become a lawyer. Too much work, too much book work, too much thinking. You got to be fairly good in school. Yeah, not me. School was not my gig at all. Nothing to worry about on VIX, folks, at all. We were at 16.25 right now. We were up over 65. Nothing to worry about it whatsoever. I mean, at all. Okay. Bueno. Beautiful. Good. All right. Let's go ahead and let's jump back in here. And so the emails that went out were wrong. The Zoom phraseology was wrong. And the PowerPoint is wrong. Okay. So what's supposed to have been what was right on this, the reason we did this is what you should have seen. That school should have been crossed off. Back to school. Nope. Back to trading. All right. So when I say wrong, the message wasn't there. What I was trying to get across. Right. We've got all of this back to school happening right now. Down south, my friends down there, right? Your kids are back in school already. My wife starts back up on the 3rd. Right? Yes. Because the 2nd is the holiday. Right. So, my wife starts back up on the 3rd, and the only reason I know that is my daughter is getting married on the 1st, right, which is Sunday. So Monday is the holiday. That is the 2nd, and the 3rd, she's back to school, although I think she's taken that day off because of my daughter's wedding. But with everybody going back to school, right now, the market is in a very transitional phase. There's all of these last-minute people going on vacation. It's the families that went, man, it's like August 12th, and we have not chosen vacation yet. We need to go somewhere before the kids go back to school, right? And it's no different. My wife and I went out to dinner last night to our favorite restaurant, normally small little mom and pop shop, normally crowded, right? On a Friday, Saturday, Sunday, they're crowded every night. And it's not because of the ambiance, right? The only ambiance in there is Rosa screaming at the top of her lungs, in Italian all the time. I mean, she's yelling everywhere. Right? It's a show. You're watching a show with it there. But it's not like you're going because it's beautifully decorated. You're going because the food is out of this world. Last night it was dead. We said, Rosa, why? What happened? She goes, probably vacation. Everybody go ready for vacation because of school coming. Right? And she said, we see it like this all the time, this time of year. So back to trading. School, right? When there's an expression, that goes sell in May and go away, right? Sell in May and go away. And that is a wonderful expression, right? Sell in May and go away. But here's the problem. That references investors, not traders, right? It's not meant for traders on that phraseology. It is meant for investors. Why? Well, pretty simple. I'm just going to open something up here for myself that I wanted to use when we were going to talk today. Summertime's coming. Markets tend to drop off. I have an entire training that I have built out, and the only place I ever use it is inside of one-on-ones when I train individuals one-on-one that work with me on trading. I go through all of the scenarios, the January effect, the sell in May and go away effect, what are the best 6 months, the worst 6 months, blah, 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 blah. I've got 15 or 18 of them in there that I teach. Right. And it's insight into the market that most traders have not built and put together to figure all of these things out. Right. But when you look at the sell in May and go away, right, I took some notes and I wanted to cover, so I'm going to read them out. Sell in May and go away is an adage referring to the historically weaker performance on stocks from May to October compared to the other half of the year. So just in general, now keep that in mind, sell in May and go away, they're talking October. Can anybody tell me what's the effect that actually happens in October? What is it that takes place in October? Does anybody know what it is? What it's called? Happens every single October. It's a major effect where a massive amount of shares trade hands. Nope, not Columbus Day. That's it, Will. Exactly. Yep, Trip. Good. Okay. Good guess, Barry. So a couple of you got it. It's window dressing is what it's called. Window dressing. What is that? Well, you own a mutual fund. And you find out, because your mutual fund is going to list that top 5 holdings. They're required to by law. But they're not required to tell you who the rest of them are. So now you find out that their top holding in your mutual fund in October when they have to reprint their report is Wrigley Gum or some, upside down Flint Rubble Bubble Gum and Screen Door Manufacturing Company. Some junk name that you've never heard of, but it's up 600% this year, right? You're looking at where's Apple, where's NVIDIA, where's Tesla, where's Microsoft, where's General Electric, where are the big names? I don't know who this LRFCX symbol is, right? So window dressing is where mutual funds sell off those off names, even though they've been massively profitable for them in many instances. So it could just be small cap stocks that have done amazing, right? And they go and buy the Apples, the Microsofts, the NVIDIAs, and the so forth. They buy the big name stocks that everybody wants to see, right? So that window dressing causes shift in price, because as all the mutual funds start buying the big name stocks, you will see a little bit of a push on there, right? So that is where October comes into play because of window dressing, okay, in there. So since 1990, the S&P 500 has averaged a return of 3% annually from May to October versus 6.3% from November to April. So 3% May to October, 6.3% from November to April. So there's a huge difference in what the potential is for this position, for your positions, for the market around those time periods, right? However, the winter doesn't always see higher returns than summer months. Based on historical data, investors could try to capitalize on a pattern by rotating to less economically sensitive stocks from May to October. See, less economically sensitive stocks, right? So and when someone says, no, you can't do well in summer months, August is one of the worst months, and it is. I think it's the second worst month of the year as far as rate of return historically. But that's great and fine and good. But we've got 2 different years, not sequential, in power option plays that August was our best performing month of the year. Our goal has always been $100,000 a month in power option plays. Both of those netted over $200,000. The highest one was $220,000. That was greater than any other month we had had any other time in the history of power option plays. And historically, until we got to a point over the last year or so, of year and a half or so where these $3,000 stocks have gone away, the Amazons and the likes, right, have gone away. And these high $1,000 stocks have gone away. And we have much less of them now because of the massive 20-for-1 splits and 50-for-1 stupid splits that companies have done. To me, they are for pop anyway. By seeing all of this take place, we've seen our numbers drop a little bit in power option plays. Right now, we should be near 900,000 for the year. We're near 800,000 for the year, so we're off by $100,000 in what we would like to do, what our goal is for the year. And I set the goal at the beginning of the year at $1 million out of $1.2 million for us, because the biggest stock we have is booking, and then everything else after that is split. Now we've got some big stocks coming up now with United Healthcare and Costco and Eli Lilly is getting onto that $1,000, but Chipotle Mexican Grill is a $50-something stock now. Okay, kind of tough to get a lot of push, a lot of bang on that buck with a $50 stock. However, for most investors, the best strategy is generally to buy and hold equities while ignoring the noise. And I would say generally, I agree. For the average investor, better for you to just put your money into the position, close your eyes, and just let it be. You can set alerts, set targets if you want, and so forth. Keep your eye on the charts. But the in and out for the average person that does not understand what they're doing can become very costly. Okay, where they're buying Apple today and they sold it tomorrow, and then they go back a month later and it's $100 more, right, per share. And then they're pulling their hair out, but they're not seasoned to understand how to trade or how to buy and hold. They're trying to trade, whether it's stocks, options, it doesn't matter. They're trying to trade very aggressively. And it may not be the most advantageous thing for them to do as far as trading goes. So back to school trading, what are we looking to do here, folks? You need to start looking at charts and just having a very serious conversation with yourself of what do I see happening, right? You can use Ryan Litchfield's modality on how he analyzes things, right? Ryan's done a phenomenal job at it, right? You could use the way that I do it with positions of the chair, right? And if you're not familiar with that, I'll do it right now for you, right? It is a visual representation of volatility in the market, okay? If we are in position number 3, rank 3, which we are right now, we're in the middle of these two fib lines. We're not near a line. That's in the middle of nowhere. So am I ready to take a trade on that? Absolutely not. I am leaned back here in position number 1. This is the first position in the chair is back here. I am back here in position number 1 saying, yep, nothing for me here. I'm just going to watch, right? We get over by MasterCard, right? And we open up on MasterCard, right? We gapped up because we closed here on Friday. We gapped up to here. So I go from position number 1 on MasterCard on the open today. I'm in position 2. I am straight up in the air. I'm focused on that chart. This has now made it onto a singular page for me on TradeStation. I have 5 or 6 of these open at a time. And I have ones that are open that look like this, right? And the single page right here, I'm going to put MasterCard on that single page. Why? Because the setup is starting to happen. I want to be sitting there paying attention. So what am I looking for? Well, now we got a pullback to that 467.37. So let's go look at it intraday. So nice that I've got this 5-minute keyed into it already. So we gapped up, we pulled back, we bounced, we pulled back, we bounced. Okay, we haven't really gotten a close near there. That is the 467.37. Our closing price here was 467.81. Not too bad. Let's see if we had anything better on a 1-minute chart. Right, so here we are on 1 minute, and what happened? We closed right there. 467.37 on this candle. We closed at 467.31. So 6 cents below. We moved up. We pulled back a little bit. We bounced. We got at least $1 up in the air. And we were able to take that trade. So you're talking about an entry at about 468.5. And right now it's at 470. Right? So it's $1.50 higher than it was. So the setup, and again, we're referring to back to school, right? But you've got to be so when that pullback happened with the moving average, we started pulling back. I'm in position 2. We're up here. Let's bring it in a little bit. So here it is, right? This line is the line we're talking about. We gap up, we pull back, we ran. Okay, I'm in position two. We close right there. I went from over here, position one. We gapped up. We started coming back down. I'm in position two. Position three, I am lean forward. I literally, for me, I slide to the edge of my chair, which is probably why I buy a new chair every year or so. I slide to the edge of my chair and my hands are on the keyboard. I'm ready to place the trade, right? That I'm actively there. I am ready to rock and roll right now, right? Bottom line is, to be successful at this, period, to be successful at trading, you've got to be able to distinguish where the market is and whether or not your risk allows you to take an entry at that point. I didn't say you're going to win all the time, because that would be a lie. You're never going to win all the time. What I do want you to do is get really good at identifying these key areas or these key times and learning how to trade around those key areas. What's the most important thing for me? It gapped up. And your mind needs to be a computer. Right? All the data going like crazy. You got the gap up on the open today. All right, am I ready to place a trade? No, I'm not. Okay, so what has to happen for me to place a trade? Well, it could fail off of here and drop. And if the daily chart gave me a yes. Now, I wasn't looking for a daily, a bearish trade here, because my moving average was down here. I was looking for a bullish trade. So now we're back on that 5-minute candle now. Actually, we're looking at one, right? We're back on that 1-minute candle now. And as we came down in here, what do I need to do? Okay, do we bounce? Yes, we gapped up a little bit on that next candle, 30, 40 cents, whatever it was. We got up to at least $1. That was my trigger number. And there's the entry in the trade. Now, remember, I did not take this one today. I missed out on this morning. I was looking at something else at this point, and it had moved too fast for me. So I missed out, in that 3 or 4 minute window that I didn't catch it. No, Eric, I said our goal in POP is $100,000 a month. Not that people in POP make $100,000 a month. The goal is $100,000 a month. If we look at POP, you open it up. Right? This year, we're up $791,018. If we look at one contract trades, meaning you only did one, this is our 10s and 4s. If you only did one, you're up $95,948 on one contract. Just one. And if you took out booking, you're still up about $65,000 or $70,000. Because booking is going to be a big part of our numbers, period. Right? So, I mean, there's still lots of opportunity there. And that was with just one contract trades. Yeah, not bad. I agree. It's pretty good. Right? So bottom line, when we talk about back to school crossed off trading, right? Back to school, back to trading. A lot of people take the summertime off. I get very light in the amount of trading that I do in the summertime for multiple reasons. Right? If it were my choice, my wife would retire from what she does. She loves it. She doesn't want to retire. She's a teacher for special needs kids, special ed, I should say. Some, mental problems, a lot of emotional problems, learning disabilities and the like. She loves what she does. But if it were up to me, she would be home, full time. She would not be working any longer. I don't need her to work. I'd rather her be home. I think it puts a toll on her, but she loves what she does. If she were home all the time, then we would spend more time together through the year. But since she's off in the summertime, I do everything I can to spend every moment with her and my daughter, who is going to be out of the house in about a month, my youngest. Every moment I can to spend the time with them to make sure that, we're building those memories, right? And the likes. So I spend less time trading. But it's also, summertime is the doldrums. You get these choppy type days that I don't want to be there. Right? Mr. Miyagi, best block, no be there. Right? I want to be far, far away when possible. Yeah, she's a special person because of that, Erica. I could never do it. It would drive me nuts. There's no way. There's absolutely no way for me to do that stuff. Yeah, they require, listen, there's a teacher and 2 helpers in that room for 6 kids or 7 kids. So yeah, they definitely, PK, need some extra help, extra time, extra work, and so forth. There was one kid that took a liking to my wife, nobody else in the room. And she was I forget what the clinical way they said it, but she didn't speak. She could, but she didn't talk. And my wife actually got her talking a little bit, but never above the lowest possible whisper, that if there was any other noise in the room, you couldn't hear her. My wife would get her to talk a little bit. She actually taught her a little bit of Italian. Nonverbal. There you go, Jennifer. Thank you. Yep. Thank you. I knew it was a technical term for it. So back to school training. Actually, you know what? Let me show you one other thing. I know many of you are in Trading You. Let me just go and take a quick look at this here. You just log in. All right. Bear with me a second here. All right. So if you have access to Trading You, right? What I would suggest is you go in and take Ryan's Tripod Trader series. It's called Trading the Who's, is how it's listed on Trading the Who's, and go in there and take that training. It's about 30 minutes, but there are 3 individuals inside of every trader. 3 people have to be there to be successful. 3 different people, very, very different personalities. And you need to know what that is and how that works. Ryan did a phenomenal job in just 30 minutes, under 30 minutes, but teaching that. So if you haven't watched that yet, go ahead and spend a little bit of time on that training. It is phenomenal. All right. Okay. What stocks do you want to look at? Drop them in. Yeah, PK, same thing. I mean, you feel for the kids. I mean, that's really what it comes down to. All right, so Erica's got Amazon. Let me go back to a daily chart. Actually, let me go up to all symbols. Just makes it easier. All right, so Amazon, we're down a little bit today. Nothing crazy, but we could be in bearish territory right now because the 8 and 21 are right on top of each other, sitting right at the 175.71. Fall below the 176, retest and fail. 171 is the target. I do like this to a downside setup. And if you can get any kind of credit spread premium above 181.5, I would love it. All right, I hope that helps, Erica. And a couple of you put that one in. Let's go look at Meta. You get the entire fib. All right, you go. Fib is good. I say the fib is good. So we were in a bullish territory on Friday. We're now in a bullish neutral territory with a rank of 2. We've stretched all the way down to the 21. You see how powerful these moving averages are? We came all the way down to the 21 and we bounced right off of it. Right. So depending on if we close down here, retest at 523.72 and fail, and then 513 is support, 515, 16. Whatever your target says for shooting to that downside is where I'd be looking to go for that, right? And then Jennifer also asked for NVIDIA. You got earnings coming out, right, on the 28th. So that's this week. Yeah, today's 26th already. I still have a July calendar up there. I have not changed it yet. And it's something in my head forcing me not to do it, to say we're just going to go right to September, skip over August. So we've popped up 3 times now. 1, 2, 3, pushing towards that 131.18. Not been able to get through it. We're still in a bullish territory with a rank of 2 right now. If we can get the bounce off the 127, 131 is the target. Is the resistance 120, 130 or so. Yeah, by 130. It's going to be a target. So you don't have a whole lot of room in there. If we break the downside, there's nothing because it's got to get through the 8 first and it's too far away. So I'm not taking the downside trade at all. All right. I hope that helps, Jennifer. Let me know. Brenda's asking for the SPY. All right. We need a new fib on SPY. We don't have a place to draw it yet. So we're working off of previous fibs. I've got an 882 here, whether I need it or not. We closed above it. And this fib is invalidated at this point. If we fail and drop back inside of it, we'll use it for now, but we just need a new place to draw. with a bullish bias with a rank of 3. So part and parcel why the SPY did not jump out at me today was I knew we were in the middle of nowhere. Nice to see that we get slightly higher than the previous high was, right? Our recent swing high was really here on SPY, right? So, but we got a nice break above there, a little bit of higher high each day, but that 565 is our upside. That is our one. That is our piece de resistance on SPY, one or two more, and this gets very crazy on that screen, on the screen. All right, so there's SPY, QQQ. See, much better fib, okay? So right now we're in a bullish bias. We are still at a rank of 3 at this point. I'd love to see it come back to the 473 and bounce. And then 44.5 is your resistance up in there. So maybe 42, give or take, is going to be a target on the upside, right? And of course, your stop will be just on the other side if it fails. If it breaks through the 473 level. Hope that helps. Brenda, let me know. We did NVIDIA for John. AMD. Who's AMD? Brenda's asking AMD. All right. So we were in a nice bullish bias. Not true bull, but we were bullish. The 8 was above the 21, but not above the 55. We failed today. And right now, if it stayed where it is right now, we're in a neutral bias rank of 3. We're dead center between those two fib lines. Nothing there for us at all. Nothing. So I'm not excited till we get above the 154.5 level. Get above, retest, and bounce. Problem is we got up to the 618, and then we had a lower high, little higher high, lower high, little high. So highs are coming down overall. Overall, they're coming down. So nothing about this excites me yet. Yep, and there you go. Jennifer said SPY and others near all-time highs and having hard times to break up further. Yeah, because it's been a run, right? If you look at the S&P 500, that was a massive run from 5120 up to 5620, 500 points. It's been a huge run, and that started on August 5th. It's less than a month. Excuse me. And we made this huge move. PK said, how much of a gap have you said that you like in order to do a gap trade on SPY? So the gaps on SPY, PK, come down to, normally it's going to be under $2, $2 or less is where that's going to be. Once you start getting over $2 and $3, because although it's a $500 position, it doesn't get, but it is the market which has a beta of 1. So it's the standard volatility of the market is the SPY. So you don't have this crazy volatile position compared to the rest of the market. So you don't get these massive moves taking place. So if usually it's a $1 or $2 gap for a potential gap fill. And you can find all of it on the gap stats, guys. If you're not using them, you're making a mistake. Let's see. Jennifer said Micron. All right. So Micron. Well, that's weird. Looks like I dragged the fib and moved it somewhere or somehow. All right. So as of today, well, we were in a bearish bias yesterday with a rank of 1. Today, we're in a bearish bias with a rank of 2, right? So overall, not bad. It already did what it had to, was retest and fail and get down below that 100, which it did. So we're looking at 93.5 as the next downside on Micron, or you look above the 102s for a bear call spread. Let's see, MU. So we're looking at bear call spread. Oh boy. So 102, Let me go back and look. I'd probably go above the 104, which is where the 21 moving average is right now, with as much premium as this is giving me. So if I did the 104s right, wow. If I sold the 104s and I bought the 105s, I could get a 24-cent credit on a $1 spread and be $4.50 out of the money. Right? So I'm not saying you should do it. I'm just saying there's a lot of opportunities out there right now if you get to recognize these types of setups out there. All right. So next week, next week, Monday is holiday. So we'll be doing Tuesday will be our power hour. We'll be doing that at noon on Tuesday. So plan for that when you go register for the next one. If they don't have it registered for Tuesday yet, if they made a mistake and put it for today, I don't know. It's our web developer. He does not celebrate our holidays. But if it is, we'll get it fixed this afternoon. Not a problem. But just realize that it is Tuesday. Monday, we are not. I am not going to be back home. We're leaving a day early for the wedding. We're staying at the hotel that it's going to be near, or wherever it's going to be staying. The wedding is then on Sunday. We've got stuff on Monday morning happening there out at the hotel. So I'm not back until late sometime on Monday afternoon, early evening, the best. So I wouldn't be doing it Monday even if it wasn't a holiday. Yeah. Fantastic. Let me see. Any more comments as we get going here? I do not believe there's an early close on this Friday, Jennifer. I don't believe so. Not normally for this. No, I don't think so. So congratulations on the kiddo's wedding. Yeah, thanks, PK. I appreciate it. It's been a long time coming for her. She's stressing out like crazy right now, driving my wife nuts, calling her like 25 times a day. What about this? What about that? Don't forget to bring this. You got to do that. And, I'm excited for her. Yeah, we're going to have fun, Jennifer, without a doubt. Thanks again. Thanks again, everybody. All right, everyone. Have a great rest of your day. God bless. And I will see all of you at our next update, which will be on Tuesday. Take care, everyone. See you then.